Mahantesh Sabarad, we've got Kunal Bothra and Naresh Mirani as always on the show. Kunal, hi, afternoon. Let me start off with you. All-time high here, broader markets in ship shape. What next?
Yeah, I think it's just picture perfect for the markets because, sector by sector, day after day, we're seeing a lot of strength coming back into the indices. Good many large cap names which have been underperforming names. So in the last couple of days, we've seen almost 3 or 4 big underperforming stocks making a slight comeback for themselves, whether it's HDFC Bank, whether it's Reliance Industries, Kotak Bank and even Bajaj Finance. I think today has made a very good comeback in the last 2 days relatively after that sharp sell-off. So I think that itself sets the tone for the indices to try and get back into sustainability. We are now about to just very close to that 50,000 mark of the Bank Nifty for the first time. I think that's also going to be an important landscape for the Bank Nifty. And typically when we see those higher digits or those psychological marks being broken, they act as strong support zones going forward.
Right. Mahantesh, just marking on the bottom of your screen, you have IOC's number coming in right now, and among the first majors OMCs to report as numbers of quarter-on-quarter basis. If you look at the numbers, they've definitely seen a decline in their profit, 40% down on a quarter-on-quarter basis. The revenue also is taken a bit easy. The margins also have been hit. Where do you see actually all of these OMCs actually headed from here on, given the fact that IOC has not reported a great set of numbers now?
So you see the oil prices is a factor that is affecting most of these oil companies. In the recent past, we had seen there was a jump in oil prices, crude oil prices. So the refining margins, I would guess, looking at the result right now, would have definitely been compressed. As it is, the refining margins for the last 1 odd year, particularly for the public sector oil marketing companies, has been pretty low. And coupled with the fact that you don't have much in terms of offtake volumes, the offtake volumes have started just recovering now. There was this post-COVID overhang in the offtake volumes, but the overall sense seems to suggest that the profitability is taking a hit from high crude prices. You have refining margins compressed and you have pretty low throughput coming in.
That's the take coming in on IOC right now. A couple of buzzers out there, and we've been marking the strength in REC, PFC. They are the ones which are really holding up high. And of course, within the Nifty, it's banks once again, with the Nifty Bank crossing that 50K mark. You've got autos, which are holding up very well, and financials as well are not looking bad in there. But Naresh, to you specifically on PFC, REC, considering they are the top movers within F&O today?
So a clean breakout in both of these names and a good consolidation has also taken place for the last 3-6 months. So now the trade is to keep a stop loss at today's low or a little higher. So in terms of, say, REC, the stop loss will shift a little higher towards 465, 470 levels. That's also a little deep at 500, but closer to 485, 490 would still be a buy with a stop loss at 470. Same is the case with PFC, would be a stop loss at 420, 25. And then look out for a buy on dips. Breakout has been good. Volumes have been good today. And the classical strategy in this cycle has been wherever there have been trends, the trends have just continued. And the only way to ride them is to keep participating in fresh breakouts with a stop loss. So that's the case with PFC REC. Someday you would get stopped out. That's the time the discipline would play in.
Kunal, let's talk about what is happening with the IT sector as a whole. If you look at the top 4 draggers today for the Nifty has been from the IT pack, be it Infosys, Tech Mahindra, or for the matter of fact, TCS. Where do you see the IT sector headed from here on? No doubt that most of them reacted to their numbers. Tech Mahindra was an outlier.
Well, it's an outlier, but then when you look at the pack, there's not been any kind of momentum for the sector. So you look at TCS, the stock is struggling now at the 3,800, 3,900 zone. Infosys around the 1440 mark. Wipro at 460, 470 odd level. So that's a big concern, because when you're expecting sector trends or sectors to get into revival, you need at least 20%, 25% of the huge underperforming names to make a comeback, and the rest of them which have been huge underperformers, they could see some bit of recovery, at least stability in terms of price trends for themselves. But we are not seeing that happening for these stocks. HCL Tech, I think if I'm not wrong, yesterday the stock made a fresh multi-month, multi-week low for itself. So on the back of this huge selling pressure, I would probably believe that the IT sector could tend to underperform. And look at it this way, that you have better opportunities available in the market. So, for example, the banking stocks, private sector banking names, large cap stocks are doing pretty well. So I think the markets would want to focus on the performing names rather than the underperforming ones.
Right, okay. Well, IT clearly not in favor, and that's quite reflective on the way the stock prices have moved. By the way, IOC has now, slipped further in trade, and that's down about almost 4% as we speak right now. So slipping pretty much to the day's lows, and I don't quite think the selling is done. It's now down 4.5% as we speak. But some news for the insurance sector, and the regulator, IRDAI, is reconsidering changes in total surrender value for life insurance policies. For more on this, my colleague Anurag Shah joins in. Anurag?
So it's a bit of a negative development for life insurance companies, because in a recent meeting of regulator with the insurance companies, the Bima Manthan, there's the discussion to increase the total surrender value for the life insurance policies. So, total surrender value is consistent of guaranteed surrender value plus special surrender value. So, now the formula will be derived to calculate a fixed increased special surrender value, because we remember that in December 2023, IRDA came up with a consultation paper to increase the surrender value, and that the proposed surrender value was increased by 5 to 6 times. But in the final regulations, because there was a resistance from life insurers claiming their ALM mismatch and their margins will be hit. So in the final regulations, the notification which was published on 23rd of March 2024, there was no major changes. So surrender value was linked with the duration of the policy. So if any policy gets surrender in the first 3 years, there was no major changes were there. But now in a recent meeting, again regulator has discussed to increase the surrender value, total surrender value, which include the guaranteed surrender value plus special surrender value. So there will be a new formula to calculate special surrender value, which will increase the total surrender value. So effectively, life insurers will end up giving more surrender value on surrender of policy, which will impact their margins.
We'll leave it at that. Definitely sentiment positive for life insurers. Mahantesh, I don't know if you caught my colleague over there, but one has seen that play out with some of the life insurance stocks as well, which have clearly been out of favor for, I think, now almost 2 years.
Yeah, I think the stock listing post of LIC was something which really spooked the market as far as the entire insurance sector was concerned. Not just that, what really happened for the insurance companies is that over a period of time, the COVID-linked claim ratios temporarily went up, affecting a lot of these life insurance companies. And then you had interest rates in the interim actually rising. Fortunately, for the past 1 year, you have interest rates quite stable, and the outlook assumes that we will have lower interest rates. So that should drive the positive cycle as far as insurance companies is concerned. And at the end of the day, when we compute the insurance valuations based on the embedded value, very often, the poor performance, the starting point of an embedded value is what is your current net worth for the company. And that net worth very often is determined by what the profitability has been in the recent past. So there is still time for that net worth to start showing up before the embedded values in the entire computation start showing an uptick, and therefore the valuations move up. Until then, I would be remaining a little more cautious. And the current news that you talked of in terms of the surrender value going up could be a move that could really jeopardize the profitability of the companies, and the very fact that I was talking about in terms of net worth positions of many of the insurance companies. So right now, I'd be a little cautious on the sector and wait for further developments there.
Right, we'll be cautious on the life insurance space is what Mahantesh has to say. But let's put the spotlight on the auto sector then. Mahindra Mahindra is the top gainer on the Nifty today, and it has unveiled its latest offering, the compact SUV, that's XUV 3XO. With this sort of a launch, the company has entered into the fiercely competitive segment with the pricing starting at around 7.49 lakh rupees. Let's find out who are the rivals for this particular model, as well as what should one watch out for. Shrishti, over to you.
Well, yes, that's the new launch and subcompact SUV launched by Mahindra and Mahindra. That is indeed keeping the stock excited as well. Why not? Because the new launch is loaded with full of features for the company, and a very aggressive and competitive pricing is what the company has done. The XUV 3XO is going to compete with some of the very successful models in the space from the likes of Tata Nexon, Maruti Brezza, Hyundai Venue. And if we see the pricing, then the company has done quite an aggressive pricing, because from all of these models, which starts range around 8 lakhs, the company has come out with a price of 50,000 lesser than those, from 7.49 to 15.49 lakhs is the pricing for XUV 3XO. Also, to give you a perspective on the production side, the company did say that in the initial times they have a production capacity of close to 9,000 of units, which is scalable to 10,500 units per month. But just to tell you and give you an industry perspective, the other successful models in the industry from the likes of Brezza as well as Nexon, the average monthly sales run rate is around 15,000 of units. So that won't be a surprise if we get a waiting period for this car as well, because in this price range, a lot of these features in this subcompact SUV is coming in for the very first time, from the likes of ADAS, panoramic sunroof and so on. Other than that, if we talk about the management outlook on this one, so they have also said that the company anticipates the growth in the mid to high teens in the SUV volumes. Now, M&M also aims to be among the top 2 players in the sub-SUV section in the next 3 years, wherein in this space they are at number 5 currently. And lastly, the entire project cost is at 650 crores, is what the company has highlighted. The bookings will open from May 15th and the deliveries will commence from May 26th. So all eyes on the booking numbers when it starts from May 15. But indeed, a very good offering coming in from Mahindra and Mahindra, and hence the stock is seeing no stopping since the start of the day. Back to you.
Not a 4.5% move now is what M&M is sitting on. I mean, who would have thought that it's going to be now a 2150 plus stock? Kunal, worth a shot, the first car, 7.49, pretty affordable.
Yeah, pretty
and
affordable,
SUV.
but not in the mood to buy a car right now.
No, still not. Much rather buy the stock,
Yeah,
right?
exactly.
Yeah. Only if we would have thought like that about Trent. Right? But yeah, okay. Here's in fact Rajesh Jejurikar as well talking about this new launch. He spoke on the sidelines of the launch event with my colleague Sumit Chaturvedi.
It's been a very strong F24, and the last 3-4 years we've had some really good successes in our SUV portfolio. This has made us the number 2 SUV player by volume, but most interestingly number 1 by revenue market share. But one segment, as you said, of this SUV market we haven't done as well. That constitutes about 25% of the 25 lakh total SUV sales in the country. In that segment, which is 6 lakhs per year, we are number 5 player. So when we said, now that we've accomplished success in many of the other segments, we really need a disruptive product for this segment. And really the 3XO, as the name suggests, is meant to be a multiplier effect. It's meant to be.
Welcome back. You're watching Closing Trades on ET Now, and over the last 15 minutes, we've seen some sort of a downtick creep in for the markets. The Nifty is now off 73 points from the day's highest point, and one of the major drags definitely has to be what the OMCs are doing. Over the last 15 minutes, we've seen a sharp knock in all of these OMC counters, be it IOC, BPCL and HPCL, and you could say the culprit for that is definitely IOC's Q4 numbers. We have Sumit to tell us exactly what impacted the numbers in the quarter gone by, because the stock saw a nosedive, Sumit, after it reported its numbers.
Well, the biggest disappointment that had come in the Indian Oil Corporation numbers in the fourth quarter was the fact that the EBITDA of the company was nearly a miss of more than 30-odd%. The street was expecting the EBITDA number to be close to 15,600 crore rupees, but the company has reported an EBITDA of just 10,435 crore rupees, a decline of nearly 33% compared to the previous quarter. Now, in fact, Q4 was expected to be a strong quarter for the oil marketing companies, given the fact that Singapore gross refining margins were on the higher side on a sequential basis. Petrol and diesel marketing margins were also on the higher side, and OMCs were supposed to report an inventory gain. But what could have gone wrong here is based on our analysis, what we spoke to market experts and stock experts. What we understand is that the company might have reported an inventory loss, because of which we are seeing this kind of a mismatch in the reported numbers and the analyst expectation numbers. Because of this inventory losses, we are seeing this 33% miss when it comes to the EBITDA number. Now, we still have not got the granular details, so we cannot confirmly say that, but most likely it will be because of the inventory losses. Apart from that, the Singapore gross refining margins and marketing margins were on the higher side, so those cannot be the reason why Indian Oil Corporation might have reported such weak set of numbers in the fourth quarter of FY24. On the positive side, however, the company has announced a dividend of 7 rupees, which is the final dividend, and which is a very high number compared to what the street was expecting. Street was going around with a number of around 3 to 4 rupees per share on the higher side. In fact, the company has reported a dividend of 7 rupees. So inventory losses is something that could have gone wrong in the fourth quarter. So we need to wait and watch out for whether that is the reason why Indian Oil Corporation has reported the same weak set of numbers.
And you can see the stock drift down. It's fallen by over almost 5.5% actually from where it started off the day, which was pretty much around the day's peak. Currently lower by about 4% as we speak right now. For the markets, for the index, like Cheryl was just pointing out, it's pretty much given up all of its gains after that dash with that all-time high. From there, we've seen a swift and sharp move downwards. But yes, the Nifty Bank as well has been hovering around the record highs. What's in store for us next? What are the levels that one needs to monitor? What could be the trigger points? Sharad is here with all that analysis. Sharad?
Well, yes, Nifty Bank is in focus, and we are all waiting for that to touch the levels of the 50,000 mark. But the question remains is how we have actually done the entire weightage is happening in the Nifty Bank. That is something interesting to know. The private names, of course, on the larger side with SDFC and ICICI Bank contributing almost more than 50% of the total weightage index. That is an interesting trivia. Also, the key level dates where these numbers have actually been touching. Of course, we'll be looking at 10,000 point. It touched in the year 2007. And that's the 11th December 2007 is when the level had touched 10,000 levels. Now also 20,000 levels, if you look at it, it took almost 8 years to Nifty Bank to go for that mark. And then after that, in 4 years, that mark was taken at 30,000. And in 2021, it had touched the 40,000 levels. In the matter of 3 years itself, now we are very close to the 50,000 levels also. Now let's look at how Nifty Bank's earning overall returns has been on a 10-year basis. And this is the calendar year basis which we have taken. And of course, if you look at it, the large numbers are actually coming in in the year 2022 and 2023. That's where the number coming is on the higher side. Also in 2017, it went up as high as 41%. Also 2016, look at it, that is also where a good growth has come in. But there are certain stocks which the journey has happened from 40,000 to 50,000 or near the 50,000 mark if you look at it. And the stock returns over here in 2024 so far has been almost 3%. But the stock returns, that is something which we'll be looking out for. And that has actually been, PNB has actually been an outperformer, almost going up 3 times. Strong returns coming in for Federal, SBI as well as Bank of India as well. Also Kotak Mahindra Bank and Bandhan Bank actually coming in the negative in this reason. But ICICI Bank, if you look at it, that has been one of the best performers with almost 54% return. Even the valuations, if you look at it, valuations ranging between 1.4 to 1.7 for the larger names for FY25 on a price to book basis. While for HDFC Bank, AU Small Finance Bank and Kotak Mahindra Bank, the valuations are on the higher side as compared to their peers. Now, what is the triggers for the banks? That is something which we will be looking out for. And of course, last 2 days, the numbers have been very strong when it comes to the overall earnings. Advances have been healthy. Asset quality is still in line till now. And the asset quality, apart from that, NIMs, they have also remained stable. And that has actually triggered a good rally in the banking stocks over the last 2 trading sessions as well.
Thank you so much for that, Sharad, for putting all of that into context. The ones that, the stocks that have actually aided also Nifty Bank's performance. Mahantesh, coming to you, and let's talk about what exactly Sharad spoke about. If you look at the contribution, mainly it's been from these PSU banking names more than the private sector banks. Is that where actually the kind of a profit pool lies now going ahead? If you have to bet on the banking space, should it be the likes of a Bank of Baroda or PNB or SBI rather than an HDFC Bank or Kotak Mahindra Bank or Axis?
So I would tend to agree with that because, when it comes to the corporate revival that is happening right now, it is being led by the CapEx team. And whenever there is a CapEx team that comes up, you'll often find the public sector banks take a lead when it comes to doing corporate loans. So the outlook remains strong for most of the corporate banks or corporate lending banks, PSUs being one of them. As far as private sector banks are concerned, they are highly reliant on consumer loans and personal loans or consumer related kind of loans. And there is a bit of a problem that is coming up. As far as the results are concerned, one of the chief worry that I have of most of the private banks is that the asset quality being now touching very low levels, they would be now looking at excess provisioning or accelerated provisioning or special provisionings to keep their balance sheet healthy for the upcoming, or oncoming next wave of NPAs. That being so, this cleanup action that has happened in the past will start reversing and will not be favorable for many of the private sector banks. Public sector banks are better placed relative to the private sector banks simply because the corporate lending theme would mean that they will have more income coming in and buttressing their overall network position, warding off any NPA pressures. So they will not require much of provisioning needs as of now. And when I say as of now, I think that is the oncoming year.
Okay, that's the take coming in on which way the banks are headed. Mahantesh, good having you on the show as always.
If you like this video, then like, share and subscribe to ET Now.